Welcome, friends. Just want to remind you to head over to my website, putparadise.com, which is focused on options trading and provides training content to beginner traders. We're delivering consistent returns, potentially 50% annual rate of return, while trading for only around 15 minutes per week. You can download my free guide called the Put Path Options Trading System, which is a checklist that outlines our trading methodology. Okay, let's dive right in to how to trade put credit spreads with Tastytrade. So first thing you need to do is open up your Tastytrade app, which you can see on the screen here. We're going to do an example for QQQ. So you're going to hit the upper right search, find the symbol QQQ, click on your symbol. All right, click on the lower right. You want to click on options. You can see we're at 588 today, up a little bit. All right, so this takes you to your options trading screen. So if you know how we trade, we typically go 28 days out. So you're going to want to click on the 12/19/2025, 28 days to expiration. So today's a Friday. We're going to go out 4 weeks to the 28-day expiration. Okay. Then you go back to the upper right. You're going to select the type of trade that you want to perform. In this case, we're going to do a vertical, short, put, and then you're going to click on the blue enter. Okay, so now it takes you to the 28-day calendar. So from here, there's a lot going on. Let's walk through it. So the red rectangle is going to be your sell to open. The green is going to be your buy to open. And you can see at the bottom there your quantity, your expiration date, your strike prices, and the type of trade, puts. You can also see a little bit above that what the mid price is, and then both sides of the trade, what people are asking for, bid and ask spread. Okay, so again, what we do is we want to look for the delta of 15. One of the great things about Tastytrade is they also tell you that one SD with a dotted line, that's your one standard deviation. It's typically around 16 delta minus 16 because it's a put. And in this case, it is right at between the 15 and the 16, 15 and 17 range, which is, again, perfect. That kind of gives you a normal curve, not too much skew either way. All right. So again, Tastytrade, it's got a great interface, very easy to use. I'm operating this on my phone. You can do all of this through your Tastytrade app as well after you get your account set up. So I typically move the sell option down first, which is the red. Okay. Now, since there's some dividends, we've got the 539.78, which is going to occur before our 28 days. I typically don't like to trade the dividend prices. I like to go with the round numbers just to keep it straight in my head. So I'm going to go up to the 540, which is actually a minus 17 delta. So we're going to look at that. We're going to also look at the 535, which is at the 15 delta, and see where our pricing is. This is kind of a jump ball. Try to figure out if we want to go with the 540 or the 535. All right, so that's the sell side. Now the buy side, again, if you've been listening to how we trade, we go $5 wide. So we're going to move the buy side $5 below. Okay. You can see here the mid price on that trade is bouncing around. It's about 58, 59, 57. That is a really good price for QQQ. I typically try to get around 50 cents. Today is a higher volatility day. The VIX is elevated. VIX is above 20. So we're getting really good pricing. So I'm not going to be overly aggressive. If we weren't getting as good of pricing, I might push it down, let's say, to the 535. So I can actually push this down to the 535 and get above my 50 cents. So I'm going to go ahead and do that. I'm going to get that additional $5 of protection and still meet my 50-cent credit target. Okay, so what you're going to do, again, your profit driver that you're selling is at 535, which is the red, and then the 530 you're buying for protection. The limit price you can see is about 52 to 53. That's the mid price, and we've got the 46 credit at the low end and the 57 credit at the high end for this spread. So it's about a 6-cent width on either side. We're probably going to be able to get this for about 51 or 52. So what you want to do from here, you just double check everything. Everything looks great. So the quantity is 1. Expiration is December 19th. Strike price, 535, 530. Both of these are puts. So in the bottom right, you click Review and Send. And again, you want to confirm everything on this page. So you're getting a net credit for 52 cents. Time in force, good till canceled. The estimated credit that you're going to get is $52 minus the fees. So they're going to take out $2 for commission, 24 cents for fees. So you're going to end up with $49.76. Estimated buying power reduction, you're going to be reduced by $450, which is $500 minus the 49.76 credit. That's how you get down to the $450. So you can make maximum profit $52. You could lose up to $448, and then it shows you your delta, your probability of profit. So again, we like to shoot for probability of profit 85, or in this case, it's a little bit more. This is standard textbook trade. This is exactly what we're looking for. And if we get anywhere near that 2x loss, which is about $100 on this trade, then we would sell out of that well before we reach that max loss of $450. All right, so from here, you click Submit, and then you would execute that trade. I'm not going to actually do that because this is not a trade that I'm interested in executing right now, because I've already executed a QQQ type trade earlier in the day. But that would be all that you would need to do. So again, if you haven't checked out my website, pop on over to putparadise.com, which is focused on options trading and provides training content to beginners. We are delivering consistent results, potentially around 50% annual rate of return, while trading for only around 15 minutes per week. You can download my free guide called the PutPath Options Trading System, which is a checklist that outlines our trading methodology.